Hello everyone, how's it going? In this video, we're going to be talking about Lucid, trading under the ticker symbol LCID. So it has been one of the most speculated stocks in the Nasdaq over the past few years. Some have said that it might be the next Tesla, and most people would like to see the company doing well, at least in the stock market, to be able to profit from it. Now, it is one of the heavyweights in a burgeoning industry. And Lucid is also one of those companies that actually has a product rolled out. So as time went on, the stock's price action, along with the investors' hype and hopes, went through some huge roller coasters. And some are wondering if this is still a bandwagon they want to hop on. In this video, we're going to look at Lucid and see if the company still deserves to have a place in our portfolio. So before we begin, I'd like to make a brief disclaimer. My videos cover my opinion on the current affairs and what they might do in the future. It doesn't mean that they're investment advice and should be watched for entertainment purposes only. No one can predict the future with certainty, just to provide our best guesses and what might happen based on what we currently know. So my videos are prepared either immediately before the uploading or a few days before they were released on YouTube. Some of them no longer correspond to the latest price actions, but nevertheless, they might always be relevant to analyze the current price momentums. Also, the videos aim to cover the securities as broadly as possible by covering the fundamentals and the technicals. Other than the price action and the latest news, we might also cover the long-term tendencies, the shareholder composition, the fundamentals, and other market behaviors. So they all affect the decisions about if we should buy a security, how many should be bought, and whether it would be bought at the current price level. With all that being said, let's get into today's topic. So Lucid went public in the height of the EV craze back in 2020 by reverse merging with the SPAC CCIV. Now the market was very excited for a moment because it would mark the beginning of a new era for many shareholders. At least that's what people thought at the time. So back then, Tesla was making one historical high after another, and it seemed that no one can stop this bullish tendency. After all, the bull market hasn't really been gone over the past 15 years. So, why would it ever stop, right? The true alternative for Tesla at that time was NIO. And investors were looking for a domestic company with better oversight and perceived safety regarding their investment. Lucid has gone public in 2020, and it is a company with more than a decade of development and operations behind the scenes. It was able to prove to the industry that it is here to stay, with massive investments and robust backers. So we have to remember that the market mood back then was euphoric, and there seemed to be no obstacle for what lies ahead of us. The current price action acts as a major cool down and an opportunity for more sustained development looking forward. So the current price action is that it went back above $6, which is psychologically, and even maybe like more than that, but at least psychologically a significant level in our mind. But of course, overall, I would say that the sell-off hasn't really stopped, and we definitely need to see like further confirmations and development to see that if this is actually a bottom. Because Lucid has been in sell-off mode for a couple of months now, and frankly, the market overall hasn't really turned over yet, right? So we might still, going forward, see a couple of months with significant downward pressure. That should be like somewhere in the back of our head. But if we wait for a few months, we might see something that's going to be changed, because remember that 2023 is going to be a very important year for Lucid. This year is the one that they have decided to massively improve their production capabilities. So we really have to see whether they can do this. In addition, they're saying that they want to enter into the entry-level market, which is good because this is going to further allow them to save on like the expenses. So some people might argue that, well, Lucid has been for a long time in the high-end segment. I think that they're going to make most of their money in a high segment. Um, the low one is just to make sure that they have like a healthy pyramid kind of business model, meaning the bottom is bigger than the top and not the other way around. So with all that being said, yes, this is going to be a crucial year for Lucid, and we really have to see how well things are going to play out before we buy in massively. Now, if we look at the long-term price tendencies of Lucid, it's not difficult to spot that the bubble has since then bursted, and in a drastic way. The market doesn't want to follow the company blindly anymore, and it can no longer hide the fact that there are numerous problems that have been plaguing the sector. The supply chain issues, the flagship companies not doing so well, the high interest rates, the economic outlook or the uncertain economic outlook, but also like the valuation model of the EV sector. These have been continuously putting a weight on companies' share price. It's not affecting Lucid alone, but also like Tesla, NIO, XPeng, and whatnot. So the market has long predicted that there's going to be a bearish market after such a long time in the bulls, and most stakeholders believe that it's going to be a very rough patch for at least 1 year. In my opinion, it's going to be more than that. I think that we're going to set in for 24 to 36 for a start, and then we shall see whether there is an additional catalyst somewhere. So the market has peaked twice in the past, and in the first peak, it was caused by hype. The second one was caused by the rollout of Lucid Air. So Lucid remains a company that has an investment value in the years to come, as long as you believe in EV sector's relevance. So if you believe this, fine. This company would be a company to get into. So the main question in everyone's mind is whether we should enter in the stock now or whether we should enter in the stock later. So the long grind to lower price levels might continue, and even though we can't say where it's going to stop, it can continue for far longer than we first anticipate. Some typical examples would be Hyliion or PaySafe. So if we look at Lucid's fundamentals, we can also see that a company's profitability needs to be improved, mostly because their costs might be a little bit too high for their revenue. And namely, not the cost of goods sold. In other words, the cost of the cars that are actually sold, but the operating fixed costs. There are some improvements, but I think that it's also an issue of scalability. So, they have said that they need to scale up the production. Well, now we have to see whether they can deliver on that. And this is going to be a key element. Another element to observe is the operating expense. So I believe that they correspond to the fixed costs, and they haven't really fluctuated that much as the volume grew. The company stands to lose about $700 million in Q3 from operations. This is going to eventually add up. So regardless of how much cash they currently have on hand, if we think about it, this will not stop the company from diluting the shareholders, which they have recently done with the wealth fund investment. But this is to be predicted because they don't necessarily have another choice. It's either that or they take on more debt. So of course they don't dilute, but I mean they're kind of giving more ammo to other people who want to see this company liquidated. That this is one way to look at things. So the liabilities have been controlled mostly, at a normal pace. So the company has grown. This is why the size of the liabilities have grown. There's not much to say here other than the fact that we can see some efforts in the attempt to preserve the company's integrity and its going concern and its solvency. This is why so far they have prioritized mostly sale of equity rather than, taking on more debt, because the debt you have to pay it back, otherwise you would face liquidation. The equity, well, you know what, we sold promises of a better future. If this future doesn't happen, well, there's no money back. So I would consider the debt level to be normal, and it doesn't really warrant any concern. Some additional relevant aspects would be the current ratio and the inventory turnover. So the current ratio is the liquidity of Lucid's assets and how well can the company meet short-term difficulties. It has been going down over time, which means that Lucid is less and less liquid with its assets, especially cash, which we have talked about before. So we cannot rule out additional rounds of share dilutions in the year of 2023. This is not going to really help the price action, or the opposite. The price turnover, on the other hand, is a good news. It has always been pretty high, and this shows that Lucid has no issue selling the current inventory. Now, once they have scaled up the production while the world economy goes through somewhat of a recession, of course, we don't know yet, right? But this is what our logic would tell us. If there's more of Lucid, and if there's less money because people are afraid that they're going to lose their job in a recession, well, where does that leave us? Okay. Nevertheless, their current clientele is high-end, meaning it might not affect their ability to buy a new car. If they were mainly like entry-level kind of company, then it might be another story. So let's also talk about like the company's shareholder composition. They're mostly institutionals, meaning like the shareholder base is relatively stable and they can afford to wait. And this is why, like, over time, we haven't seen that much movement within the company. And this kind of offers us a layer of reliability and stability that we definitely need in a company that we want to invest in, which Lucid is. Like, it's no longer a company that we can just come in, go out, and leave with like a massive sum of trading profit. This is a company that you can put your money gradually over time in order to see like the company blossom eventually. That is going to be the play, in my opinion. So my recommendation is that this is a good stock for investment overall for the medium and long-term perspectives. Now, the idea is that Lucid is eventually going to do very well for itself, and we can cash out the investment by then. Where is then? A few years from now. So 3 to 5 years from now, at least, right? Right now, we're waiting for more confirmation to see whether this is a relatively stable bottom that we can expect. If it can, then I would say that we can start entering now with an expectation that, eventually it's going to, eventually it's going to keep going lower, right? Or it might keep going lower, but we have an allocation for that scenario. And regardless of where the price goes, we can always like smooth out the volatilities by buying them in small chunks. So I would recommend to buy it within the next 6 to 9 months. Of course, you can even drag this longer. So above and beyond 12 months can also be a way to look at things. Because remember, we're in for the medium to long term. So it doesn't really matter where the short-term volatilities are. So my recommendation for the maximum exposure would be between 3 to 5% of your portfolio.